Good morning, everyone. Welcome to 55 minutes of current and relevant business conversation. That's what we do here on Business Morning. And yes, we start as usual from the global space, even though I'm in Abuja, in case you're wondering why the set is different. Well, oil prices inch high on Thursday, extending gains from the previous day as a larger than expected draw in U.S. crude stocks signaled firm demand, while investors remain cautious about the Iran-Israel ceasefire and stability in the Middle East. Brent gained 53 cents, that's about 0.8%, to $68.21 a barrel. WTI, that's gained 56 cents, that's 0.9% there, to $65.39 a barrel. Both benchmarks climbed nearly 1% on Wednesday, recovering from early week losses after data showed resilient U.S. demand. U.S. crude oil and fuel inventories fell in the week to June 20 as refining activity and demand rose, according to the Energy Information Administration. And then crude inventories also went down 5.8 million barrels, exceeding analysts' expectations. Gasoline stocks fell unexpectedly by 2.1 million barrels compared to the forecast of 381,000. President Trump has said that the U.S. has not given up its maximum pressure on Iran, including restrictions on sales of Iranian oil, but signaled a potential easing in enforcement to help the country rebuild. All right, so we will talk about more about what's going on in the oil space. We hope to have Dumebi join us from our Lagos studio. Moving on to other stories, today is going to be a memorable day because President Bola Tinubu is expected to sign into law 4 groundbreaking tax reform bills that should boost the country's fiscal and revenue framework. That's supposed to happen today, is one of the activities scheduled for it. And the 4 bills are the Nigeria Tax Bill, the Nigeria Tax Administration Bill, the Nigeria Revenue Service Establishment Bill, the Joint Revenue Board Establishment Bill, and they were passed by the National Assembly after extensive consultations with various interest groups and stakeholders. The new tax laws expected to lead to increase in revenue generation, improve business environment, and boost domestic and foreign investments in the country when they become operational. So that's a big thing to look out for today, at least for the business community in Nigeria. And of course, after the assent, then we'll know when the implementation or the enforcement will start, and all of the expectations that has been following, you know, this tax bill from the beginning. And then yields on Nigerian Eurobonds dipped to the lowest level in 2 months last week as a rally in oil prices lifts investors' sentiment. Average yield slid 8.65%. This is according to some data made available to reporters. The last time yields were in the region was the last week in March, when yields were 8.79% before the global tariff crisis. The Nigerian Eurobond market took a blow from that global tariff crisis, causing the average yield to hit 11.37% in April. And the Eurobonds that recorded the biggest yields on Nigeria Eurobond dipped, and also in March it was at about 8.79 before that tariff crisis that we saw globally. And then away from there, the Nigerian Customs, of course, they've said that, but in Ibadan, there's a report that IBEDC has cut connection to train station. They've been disconnected at the train station because of unpaid bills. That's according to the power distribution in Oyo State. And of course, this has its consequences, and there are conversations going on. This has been confirmed by the corporate communication of IBEDC, and looking forward to it being resolved in no time, because obviously this is affecting transportation in Oyo State, connecting to the neighboring states. And then why I'm in Abuja this time is the Afreximbank. I'm sure you saw that report yesterday, but I'll tell you more about it now. And that's that the president and chairman of the board of directors, Dr. Benedict Rama, says that Afreximbank has mobilized over $250 billion into Africa over the past 32 years. The bank is 32 years. This is a 32nd meeting. He describes the bank's journey as one of resilience, determination, and transformation. We're speaking at the ongoing annual meetings of the African Export-Import Bank in Abuja. He underscores the significance of the occasion, pointing out that the bank, once regarded as an institution with an uncertain future, has grown into one of Africa's most influential multilateral financial institutions. This was captured in his welcome address, and he reflects on the symbolic return of the bank's annual meetings to Abuja, where the very first meeting was held in 1993. He says it marks a memorable homecoming and notes that, according to this, that the city has played a significant role in the bank's evolution and successes over the decades. And building the future on decades of resilience is the thought of Afreximbank as they begin the 32nd annual meetings, and it's holding in Abuja. So just like common conversations at this time, Africa is looking inwards. Afreximbank is not different, but for this year, they are celebrating the achievement in a decade, especially as there's set to be a change of the presidency. Dr. Rama ends his tenure this year, and so it's the culminating and the climax part of this annual meeting. But first, the conversations. Records show that about 7,000 delegates have registered to attend, mostly from African countries, but this time the Caribbeans are in attendance. Senior Executive President of Afreximbank, Dennis Denya, emphasizes the choice of the theme.
The theme also was influenced by the ongoing global developments as the world continues to experience waves of global shocks with significant implications, especially for developing and vulnerable countries. Thus, this clarion call to look within and take our destiny in our own hands. An emerging fractured world characterized by heightened geopolitical tensions, economic fragmentation, and realignment, increasing protectionism crystallized by trade, tariff wars, blatant disregard of rules-based multilateral trade, and heightened trade uncertainty is exacerbated by the withdrawal of aid from the continent.
Nigeria's governor of the central bank is full of commendation for not just the bank, but the president.
Over the last 32 years, Afrexim has grown from modest beginnings to become a symbol of African financial fortitude. From an initial capital base of $750 million, relatively small amount by international standards, the bank has expanded its capital assets to over $40 billion US as of the end of last year. This remarkable trajectory reflects both prudent financial stewardship and the continent's growing confidence in its capabilities. It is also a testament to the expanding coalition of stakeholders spanning 51 African countries and a mix of public and private investors who have placed their trust in Afreximbank's position.
How intra-African trade is expanding, it's unlocking huge potential in sectors.
The opening event seems right to share the findings of the bank on the state of trade on the continent, captured in the Africa Trade Report.
The report calls for building a resilient, Africa-centered financial ecosystem led by African institutions anchored in local currencies and aligned with the continent's priorities. Achieving this vision, however, involves several critical initiatives. Firstly, there is a need to strengthen African development financial institutions so as to close the estimated $120 billion trade finance gap that continues to limit African trade. And that trade gap is not simply a consequence of demand exceeding supply. It's also largely driven by structural constraints like the Basel IV regulatory impact I mentioned earlier, and systemic rating biases that disproportionately affect African financial institutions.
And for the next 3 days, more perspectives will be shared on the theme and boosting ties on the African continent. Ini John Mekwa, Channels Television News. Well, that's part of what I was doing after the program yesterday. There's more about my activities after Business Morning yesterday. But first of all, let's settle on what's happening with oil and the impact on Nigeria, what to expect also. And we're doing this with Dumebi Uduwole. She is a senior manager with Financial Derivatives Company from our Abuja studio. Dumebi, I know you miss me, but you have to stay. You have to deal with me from a distance today. Good morning. Welcome to the program.
Thank you so much, Ini. Good morning.
Great. So we've seen conversations, ceasefire, fragile ceasefire, Iran's nuclear plant has been destroyed. We've seen all of that feeding into the price of oil. And of course, this affects us as a country because our mainstay is oil. Where are we now and what are the expectations?
I mean, we're still in that place of uncertainty and volatility, right? Not until we see a significant slowdown in the uncertainty in the global economy, when you consider all of the multiple events that are significantly impacting the oil market, we might not likely see any change in the trend of oil prices. Oil prices right now are trading at above $60 per barrel, and that's a trend we expect to see continue in the near term, right? And when we also dissect it, we know that there are supply factors and there are also demand factors right now impacting the oil market. On the supply side, we know all of the wars that are happening right now. There are about 3 of them. There's the U.S., Israel, Iran dynamic that is going on. There's the Israel-Gaza, and there is still the Russia-Ukraine war that has started since 2022. Right, and all of this continually, impacting sentiments around the oil market. There's also the concern of supply, right? Saudi Arabia and some other OPEC members are considering, the continued increase in OPEC supply. And if that continues, right, that means that oil prices would likely, remain around the $60 to $65 per barrel range because of an increase in supply from OPEC member countries. And there's also the demand aspect, right? Demand right now is still pretty much high for crude oil. We have seen, drawdowns on, U.S. Crude inventory stockpiles, and what that means that there will likely be an increase in demand, going forward. We're also in a period that where pretty much petrol demand is still pretty high. And with the current range of oil prices that we're seeing, what that means for Nigeria is also split 2 ways, right? There is the external impact, there's also the internal impact. The internal impact, starting with what is most, important for a lot of consumers. They want to know what is going to happen with petrol prices. We do know that with the current trend of oil prices that are rising right now, all petroleum products in Nigeria, the prices are likely to, remain high. We are still expecting some news from the Dangote refinery, which right now in the market seems to be the prominent price leader. And if we continually see oil prices remain at the current trend, we do expect petroleum prices to remain at the current levels that they are now. And obviously there's this spillover effect into the inflationary pressures in the country and how that feeds into logistics and transportation costs. Then the other aspect of it is what the prices are and how that feeds into government revenue.
Yes, I think you just touched on it. I wanted to settle on the consumers' part. We have more consumers than the government, even though the government controls, they're smaller in number, but they control more consumers.
Yeah.
And so last week we saw new pump price come into effect. And having a conversation with an average Nigerian, people still say, how can the price just get up like that? How can it be increased? I guess we still have to have this conversation to remind Nigerians that it's a regulated environment.
Yes.
And Nigeria, as a member of OPEC, deals with crude at the global price. And so, I mean, when there's a change in price in the global scene, we have to expect that it will show at the pump, although the lag is another thing. We don't know how long it will stay and how long we should expect before it feeds into the pump. But I guess it's a conversation, Dumebi, that we still have to have for the sake of a lot of our viewers.
Yes, I mean, you pretty much analyzed it in here. I think you should join us as an economist at this point. But pretty much you've analyzed it, and that's truly where the Nigerian, downstream petroleum market is right now. We are operating in a different market structure. We're operating in a downstream petroleum market sector that is now deregulated. And what this pretty much means for the average Nigerian is that the price of petrol will truly now reflect the cost, of incurring, the cost of procuring the crude oil, the cost of refining the crude oil, and whatever additional costs that the refineries are incurring. And that's exactly what is currently happening. Although we also need to, I think, beyond sensitizing people and creating that awareness of understanding as to how the new regime that price determination is now for petroleum products, I think it's also extremely important to emphasize the nuance that exists in developing and frontier markets like Nigeria when it comes to prices. I think on Tuesday I did mention that prices in frontier and developing markets are usually sticky downwards. And what that simply means that prices are easy to go up but very slow to come down. And I think that also emphasizes the need for regulatory bodies that are very protective of consumers to also come up and also speak around, price discriminatory, actions that could come up as a result of this, artificial price hikes that could also come out of this, and to one extent price gouging, because we do not want a situation where the consumer is not protected and they consistently, are, embattled because of, sharp increase in prices. And when the dynamics show that prices are supposed to come down, they do not come down as quick. But however, I think it's also important to mention how the last 2 months have been with Dangote, increasing price and also reducing prices in line with, the trend of crude oil prices. And but the way it works is when this crude oil is procured and is refined, there's a lag effect, right? Because crude oil is purchased in forward contracts, right? And so the price of the crude oil we might be buying today at a higher price might have been purchased some 2 weeks ago when oil prices were significantly high. And there's that 2 week to a month lag for when prices would actually truly start, following the trend of what they were bought at in the domestic market. But I think it doesn't isolate the impact on consumers, and I think that's where a lot of communication and sensitization needs to come from policymakers and stakeholders to really explain to people and drive home the current situation of things as to why prices are the way they are.
Yeah, I think the other side of the conversation maybe is the revenue. So yes, with an increase in price globally, is that the government has more revenue, and it also brings back the conversation of subsidy removal, yes, how much has been saved so far and what is being used for. We see FAC has increased since subsidy was removed, but a lot of Nigerians are still wondering, was it really worth it, the removal of the subsidy? Because I don't know, do we have how much is being saved, and what is it being channeled for, both for the subnationals, not just at the federal?
Yes, I mean, I do understand the sentiment, and I think, again, it's one of those situations where I would like to dissect it in two ways, right? There is a theoretical aspect of it with where subsidy is removed, right? It means that the government has more funds at its disposal, right? More savings to do a lot more meaningful spending in the economy. And we have seen, actually, from 2023 up until today, an uptick in capital expenditure, right? Now, this is isolating some of the other, elements in the budget, but I think we have seen that happen. We have seen the drive for infrastructure development, but these are things that take time, right? The benefits of these are more long term, and people want to see the immediate benefit of this so-called subsidy removal and the savings that the federal government has said that they have made from it. And I think that's where social safety nets and conditional cash transfers also come into play here. While the government is set to make more revenue when oil prices increase, and that also has an impact on our external reserves and then the CBN's ability to defend the naira, there is the aspect of people not feeling the direct impact of that. And what that looks like is they say we've made more money, but we're still suffering, right? Prices are still high. I'm not able to still purchase as much. And so that's where, again, number one, the government being very transparent and actually ensuring that those social safety nets are available for people. I think the IMF and World Bank have hinted at this so many times, that when reforms are taking place, especially in developing and frontier markets that have significant a significant chunk of their population, of which in Nigeria's case about 60% of that, living below the poverty line, there is extreme, there has to be, savings, there has to be direct and targeted efforts to ensuring that these people are somewhat cushioned from the direct impact of these painful reforms. Unfortunately, that hasn't yet been the case for so many vulnerable Nigerians, right? And it almost increases that government trust deficit between the government and the people. And that's the aspect, the other aspect I wanted to speak about. There is the emotional connection, right? There is that interconnection between the political economy and the macroeconomy. And not until that trust and that deficit is bridged significantly through communication, through actually doing things that people genuinely feel and understand that these people that are in places of authority care about them, we will continually see these conversations happen, we will continually see these deficits remaining, and there will continually be that gap and dissatisfaction between the people and the policies that the government has put in place, regardless of whether the savings are coming in or not.
Yeah, I think this reminds me of a conversation I had last week or so about connecting the micro and the macro. So we see the reforms generating good numbers when it comes to the macroeconomic indices, but it seems there's a disconnect between translating that to the micro so that people can actually feel the impact of the good numbers we are seeing at the macro side.
Yes. Yes, I do understand that, and I think it's one of those situations where we see, policies happen at the top and it doesn't trickle down. And I think the last time I was here, I did explain the importance of strengthening the middle tier of government, right, and governance. We have 3 tiers of government in Nigeria. There's the federal, there's the state, there's the local. And not until the state and local governments begin to implement or carry the same mindset and trend of policy making we're seeing at the top across their states and local government areas, I think that trickle-down effect of, either economic output or economic growth or policy making, it becomes difficult, right, for people to feel that impact. The woman selling pepper on the streets does not understand what monetary policy is, and it will take some time for her to. So the expectation is that the local government chairman that understands the implication of interest rate increase and how that impacts, her ability to get a loan from the bank, right? There has to be that synchrony, there has to be that sensitization. And what this again speaks to is the caliber and quality of people that we have placed in authority within this middle tier of governance, right? Ensuring that these people actually understand the policies that are being put in place. They do understand the importance of the trickle-down effect of economic policies and output growth, and ensure that it eventually gets to the people that it's supposed to get to. Because when there are leakages, when policies are made and when output is derived, it becomes a problem for people at the grassroots to feel the impact of what these policies are supposed to do. So what it looks like in practice is Nigeria comes out to say we've grown about 3.4 or 3.5%, and people don't feel that. We say inflation has reduced, but people don't feel that. We say the government has instituted a credit scheme for maybe SMEs or market women, and they don't feel that because there are leakages and there's also a knowledge and motivation gap within the middle tier of the government. And I think it also speaks to the fact that we need to obviously strengthen and ensure that states become more independent rather than relying on revenue from from the federal government, and here now I'm speaking very boldly about the fact disbursement, where we know that most state governments, about 33 of 36 state governments, rely significantly on this allocation. But when state governments understand that they have the significant, responsibility to generate revenue, increase their IGR, generate employment for people, we will begin to see, and as a matter of fact, even begin to focus more on commodities that they have comparative advantage in, and actually focus on attracting, FDIs into those states. We will begin to see some of this trickle down effect, because these are policies that are happening on the federal level, but we have not yet seen that translation at the state and local government level.
Yeah, well, at the end of all of this that we have talked about, Dumebi, I think at the end of the day, an average Nigerian will ask, what can the Naira buy? We saw on the parallel market that the Naira gained yesterday, but how much difference does it make? Do we know what drove that gain on the parallel market yesterday?
Yes, I mean, one of the main things was obviously we saw, some level of supply, to the FX market yesterday. So we have obviously been seeing a level of stability, right, in the FX market. The Naira has oscillated within a very tight band of around 1,580 to around 1,610, and we do expect that trend to continue. And I think it's extremely important for us to dissect the context of where the FX market is coming from and where we're trying to get it to. We're coming from a period of almost 10 years of capital controls in the FX market. And that backlog, that lack of trust and all of that has gone on over the last couple of years has made, the Naira look, they put the Naira at an artificial level, right, that was far overvalued compared to, its actual price. And I think it's extremely important that we explain to people that the current level at which the Naira is trading at was what some businesses were already experiencing as far back as 2021, right, because they were buying at a blended rate. Now, the unfortunate thing is the fact that it came at a very sharp level. The devaluation, the reforms, everything happened simultaneously, hence the significant shock. And I think that speaks to how we have adopted policy making over the last couple of years, over the last 2 years. And for us to cross-correct that, it's extremely important we understand the impact of gradual phasing of reforms in frontier and developing markets, because that helps people relate more to the news, it helps people relate more to the implications, and it helps them plan better, right? But with the Naira currently, with the current trend of the Naira, we do expect this level of stability to remain, right? And what that looks like for businesses is they're able to plan better, they're able to understand and see, able to access Forex, for instance, at an easier level. The bottlenecks on Forex access and, engaging in Forex transactions is far reduced compared to where we're coming from. And that, to an extent, has instilled, confidence in investors and business owners. On the consumer side, of course, because of what the Naira is currently trading, and when we look at what is happening at the customs level as well, we have seen that steady increase in imported inflation, especially because of food items and other commodities like smartphones, like smartphones and other, digital assets that we have seen that price significantly increase. And I think not until we get to a point that the Naira is far stable, there are less shocks on the global economic side as well. And there are steps to ensure that we reduce this, we reduce the bottlenecks regarding import and the issues, the challenges that businesses face. Until then, I think we'll continually experience what we're currently experiencing with the exchange rates. And just to add, I think it's extremely important that we focus right now more on accessing, accessing raw materials locally for production. I know this brings to mind the level of insecurity and also, the bottlenecks that businesses face and challenges that they face. And I think it's extremely important because it points to, it shows us the pain point of businesses and investors. And I think that's where, the federal government really needs to hone in and double down to ensure that insecurity threats are significantly reduced, so that the businesses that are currently within the economy, they are able to access raw materials locally, and that helps them reduce their imported costs and in turn reduces imported inflation.
Yeah, maybe I can see you prepared for us this morning, sharing a whole lot, even bringing up the issue of raw materials. Don't get me started on that raw materials.
Yes.
Let's just find out what's happening in the commodity space. I know it's still planting season, I believe, and that, of course, is affecting price.
Yes, I mean, we're seeing a mixed trend in commodity prices. Some commodities that within their planting season right now, we're seeing their prices high. I think on almost every opportunity I get, I always talk about plantain because I'm a plantain lover. It's very painful to see plantain as high as it is. I really hope plantain starts to come down. But basically, I'm just trying to speak about the seasonality effect going on here and how that, you know, within this period, we are seeing some commodity prices increase. Tomato prices are also still high. The price of palm oil as well is also high. And again, I think that speaks to some of the agric productivity issues that we are currently facing. Then, I mean, there's a whole host of them, from storage issues to logistics issues to informal taxation and all of that that feed into, you know, the prices of commodities in the domestic market. We are also seeing the fact that the logistics cost as well right now is significantly, you know, increasing and impacting the price of commodities, especially through diesel, because we know that, you know, the trucks that bring in food from the north to southwestern states, you know, they are diesel-run trucks, and the fact that diesel prices are higher is, you know, increasing their costs. The flooding incidents in Niger, coinciding that with what has happened in Benue, we're also seeing some supply shortages from those regions, and that's obviously impacting the market. And we do think that it will continue to impact the market, at least for the next couple of weeks, getting into even July. And I think this speaks into the inflation numbers that would likely be coming out soon. Getting into the middle of July, what that tells us is June inflation numbers are likely to increase because of some of these new developments that have impacted, you know, commodity prices from the beginning of June up until, you know, the end of June. And I think this is going to be a very strong consideration for the MPC ahead of its July meeting.
Yeah, well, I don't know if the court is closed, but I mean, thank you so much, Dumebi, for putting all of that together for us this morning. Dumebi Oduwole is a senior manager with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's take a break now. When we come back, some of those conversations that I had yesterday at the Afrexim annual meeting, that's what we'll bring to you from exploring the theme too. Data shows that Africa is increasing intra-trade, that's within itself. That's some good news. We'll explore all of that after the break. Please stay with us. And now some of those conversations from yesterday, and we explored the theme. The theme for this year for Afrexim is building the future on decades of resilience. And I was wondering why they chose that theme. So beginning with that, I had a conversation with the Managing Director of Trade, Finance and Corresponding Banking Global Trade with Afreximbank, Ms. Gwen Waba, and she told me that and a whole lot more.
Theme of this year's annual meeting is very apt because it's really representing the pinnacle of the work of the bank over the last 10 years. The bank has gone through and survived through many crises. We had the commodity crisis of 2016 to 2018, then we had the COVID-19 pandemic, then the Ukraine-Russia crisis, etc. And the bank, through all of these crises, has remained resilient. It's been able to adapt, stay the course, and bounce back from all of these crises, and we've helped our clients as well to weather the storm. So 10 years of Professor Orama's reign at the helm of Afreximbank, I think this theme really just defines the pinnacle of that 10-year peak.
And over the past decade, what progress would you say Africa has recorded?
I think as an African continent, Afreximbank obviously has been at the helm also of helping African countries, African state-owned entities and African corporates to continue to grow and build and become better positioned to compete with the rest of the world, but also to bolster intra-regional trade, encouraging trade between African countries, within and amongst African countries.
Would you say that, this latest introduction of tariffs globally has brought African countries closer to themselves?
I would say that, as you know, the launch of the AfCFTA, one of the purposes is really to do away with tariff barriers and other intra-regional barriers, the tariffs being just one of them. Obviously, if the continent is to trade with one another, it's important that we harmonize tariff standards so that we can encourage African countries to trade with one another. Otherwise, there'll be no incentive for countries to trade with other African countries. If there are barriers to entry into other African markets, then they'll just continue to trade with countries outside of the continent. So tariffs is one aspect, but there's obviously many other barriers to intra-regional trade.
It doesn't matter how much Africa tries. It's a global world, so that means Africa will still need those extra African trade.
Absolutely. So my business primarily focuses on extra African trade. And you're right, the continent, whilst we bolster intra-regional trade, we can't quite do away with trading with the rest of the world. Remember, Africa is a big producer of resources. What we need to do is add value to those resources and then export those resources outside the African continent. But more importantly, Africa is also a net importer of most goods and services. For example, as we industrialize the continent, we don't yet have the production facilities for big manufacturing equipment or for factories on the African continent. So we still need to import some of that technology, both physical and intellectual technology, to help us industrialize the continent. So the way I see it, whilst we boost inter-regional trade, we will always have an element of extra African trade, both for imports and for exports. But the goal really is to reduce dependence on outside of Africa so that we can be more self-reliant and self-sufficient within the African continent.
And what strategies do you think can be employed to bring about a balance between the intra-African trade and the extra-African?
Yes, so there's certain quick wins that we can do. For example, I read a statistic that out of the available arable land globally, 69% of that land is on the African continent. What does that tell you? We can grow our own food. So not only can we ensure our food security within the African continent, perhaps Africa can also become the breadbasket of the world. If we build mega farms, industrialized and highly mechanized mega farms on the African continent, there's no reason why we can't feed ourselves, but also feed the rest of the world, just as an example.
I guess that's why you have a seminar coming up?
We do have a seminar in November. It's a capacity building seminar that we hold every year. And it's basically a seminar that trains bankers, lawyers, anybody involved in trade, particularly connected with Africa. And this year, the seminar is being hosted in Abuja, Côte d'Ivoire, on the 4th to 7th of November, 2025. And we hope, as usual, that all of our financial institutions' clients and their clients will be able to attend. Join us in Abuja.
During the event yesterday, there was the launch of the Africa Trade Reports by Afreximbank. Some interesting data came out of that. Well, top on the list was that Africa is trading more with itself than with outside, at least increasingly. That's what the group chief economist of Afreximbank, Dr. Yemi Kale.
Well, it's not something that requires convincing. The data is there. If you look at all the trade statistics, is one of the easiest data that we have, because if you are trading in one country or the other, the information is there. So when we say they are trading more with themselves, we are not saying that they are trading more with themselves than other countries. We are saying it's improving. So if you look at African trade, 10 years ago, it was maybe 3-4% within the continent. Now it's 15%. So what we are saying they are trading more means that it's gradually improving. And that's the way to go. But 85% is still traded with non-African countries. So what I'm trying to say is it's gradually getting better. And because of that, it's slowly reducing the vulnerability of African countries to global shocks.
And I mean, for me, when I hear about exporting raw materials, it's really heartbreaking. And we've been doing it for decades. Would you say there's an intentionality by governments of nations in Africa to add value, at least, before it is being exported? We're staying on it.
We're doing a lot in terms of value addition. That's what the Fund for Export Development, for example, does. The Fund for Export Development is investing in African businesses as a way to give them additional capital to do exactly that. We are lending money, billions of dollars to African businesses to do exactly that, to encourage them to build those production facilities so they can convert raw materials to value addition. So we have a whole strategy for value addition across different sectors, across different commodities in Afreximbank. That's one of the major things that we do, and we have gotten some success in several countries, from textiles to the diamond value chains. We are hitting all those value chains. You will notice that one of the things we also spend a lot of money in is developing special economic zones. Again, the objective of those things is to actually do exactly what you are saying. So we are, again, it's starting from a low base, but the idea is to gradually start to expand across Africa. Value addition is a core agenda as far as Afreximbank is concerned. So that is, if you check 10 years ago and now, you see significant progress in terms of doing that. It's just that we have a long way to go, but gradually we will get to the point that we need to.
And talking about value addition, well, we appreciate Afreximbank and all, but what areas would you say Nigeria is focusing on? So we're not just lost. What areas or what facilities is Nigeria using when it comes to value addition before export?
I think if you look at the facilities that we provide for Nigeria, it's still lightly concentrated in the oil and gas space. But the truth is, the oil sector determines a lot of things in the Nigerian economy. It determines a lot. I've given several presentations where I've said that 65%, over 60% of Nigeria's economy is dependent on the oil sector. So even though the oil sector is just 5%, another 60% cannot function without the oil sector. So whether we like it or not, we need the oil sector to work for other sectors to work. So to be able to diversify away from oil, we actually need oil. That's what countries like the UAE did. It was their oil revenues that they used to develop everything else. So I'm not, as long as we use the development of the oil sector, we use the resources there to help develop other sectors so that we don't need oil again. That's the strategy. Whether or not that's what we are doing or we have plans to do, I can't really speak to that. But yes, a lot of the support is focused on the oil sector, but like I said, the strategy should be develop the oil sector, ensure it works very well, generate as much revenue from that sector, and use that revenue to make yourself less dependent on that same oil sector. But until you do that, you can't develop any other sector without the huge revenues that come from oil the way we are currently.
And I mean, we talked about China saying no more tariff for African countries, but even within Africa, it seems there are tariffs, even though officially there's none, there's not supposed to be anyone. You see that for a truck, for instance, to go from Nigeria to Ghana, there are certain tariffs and levies that are involved.
That is what we classify as non-tariff barriers. Most of the time we focus on the official ones, tariff barriers. We say we are taking tariffs off, but even officially, even if we are taking tariffs off, they can create non-tariff barriers. So it's not even about tariffs. We just keep your goods in the port for longer than necessary. There are many ways we say the standards are not of high enough quality, so we reject them. So I think the conversation now, if you look at the EFC, FTA, all the different agencies involved in trade, they are now focusing on non-tariff barriers, some of the things you are mentioning, how to streamline this thing. The problem is you have 54 African countries signed up to the EFC, FTA. They all have their different rules. They all have to, some of those rules are legal, established by law. They have to go back, some of them have to go back to their parliaments to change the laws. If they don't do that, they can't actually do this. And some countries actually move slower than others. So some of these things are creating those challenges. So again, it's a slow process. And like I said earlier, when you have been used to a particular system for decades and you want to change it, sometimes it takes a gradual process. You start knocking it down over time till you get to where you want to get to. I think that's where we are. 5 years ago, we had only 2 or 3 countries signed to PAPS, for example. Now we have 16. It's a continuous process. Before you know it, it will be all African countries. So I think what we should focus on is the process. As long as we are moving forward, as long as things are getting better, even though we have not gotten there, I always say that as long as things are moving in the right direction, that's what we should focus on. We should try and move it faster. But as long as we're not going backward or staying still, I think that's what gives me comfort. There's a lot of movement in the right direction. It's not moving as fast as we want to. I think that should be the focus. How do the African countries talk to themselves to move some of these rules a lot faster than it's currently moving? But yes, there's progress, definitely.
All right, so that was a conversation I had with the group chief economist of Afreximbank yesterday. And of course, the event continues today and tomorrow. And then we expect the announcement of a new president on Saturday. You can stay with us here on Channels Television. We'll certainly keep you up to date on all that's happening there and a whole lot more. Now, let's head to the global space. Will Ibong is standing by at the Lagos studio. Will, over to you.
Hi, Ini. Thank you so much. We see you're having fun there, but let's just jump right into it. A new report by the Resolution of Foundation says Britain faces a bleak outlook for living standards, with typical disposable income set to rise by just 1% or £300 between 2025 and 2030. Lower income households could see a 1% drop in income, while pensioners may gain up to 5%. Families with children are projected to see no growth. The report highlights rising mortgage costs as a major factor, with homeowners on fixed deals facing income declines, while outright owners are set to gain slightly. Now, still staying in the UK, the pound sterling climbed to $1.37, its strongest level since January 2022, after reports that US President Donald Trump may announce a replacement for Fed Chair Jerome Powell sooner than expected. To shed more light on that and more, our London correspondent Juliana Olainka joins us. Juliana, the pound has rallied to a 3-year high now. Does the pound rally reflect confidence in Britain's fundamentals, or are we simply riding this global uncertainty?
Really, it's a mix of improved domestic sentiment and international relief. We've just had the Prime Minister speaking live at the British Chamber of Commerce's global annual conference, and is really pledging to maintain economic stability, to support small businesses and position Britain as a global champion for free trade. And I think this has been quite rightly reflected in the market, and the fact that sterling has improved significantly over the past couple of days. In fact, it's climbed to, I think, just above $1.37, which is the highest it's been in over 3 years. Of course, I think it's worth pointing out that the ceasefire, the fragile ceasefire holding in the Middle East, has had a major ripple effect. Of course, that's weakened the US dollar and fueled risk appetite. So yeah, really good news, and let's hope that this external uncertainty will help shift and push the pound even further.
Okay, well, we rejoice in that. How markets, want to know which sectors are rejoicing here, how markets responding to this stronger pound that we're seeing?
Yeah, I think the response is pretty mixed. Still telling, it's still quite early, of course, here in the UK, but government bonds, bond yields, they're rising. 10-year gilts are now at 4.6%. This reflects tighter financial conditions. FTSE 100 holding steady too, still seeing gains in financial stocks. Oil, that had dipped earlier in the week, is slightly gaining. Lots of questions now, Will, about interest rates. We know that the Bank of England Monetary Policy Committee held them at 4.25% when they met last week at Threadneedle, but there are expectations that a rate cut could come before August.
Okay, but looking at this, the stronger pound now, what do you think is how do you think it's going to impact, maybe, say, disposable income of Britons in the UK? Seeing that report that disposable income, their outlook for living standards is going to drop very soon.
I think consumer confidence in the UK is quite strong at the moment. We know we had Rachel Reeves' spending review. There is a debate currently ongoing in the Palace of Westminster at the moment about welfare reforms. I think that's the main sticking point for the Prime Minister in terms of domestic headache. Things do seem to be turning a corner, but we don't want to leave behind the poor and vulnerable. So let's see how MPs vote today when it comes to whether or not these welfare reforms will be peeled back.
Okay, so looking at other spaces, oil and gas sector there, Juliana, we see Shell officially denying any takeover talks with British Petroleum, that's BP, and is now facing a 6-month bid blackout under UK rules. How serious is this regulatory freeze in terms of limiting consolidation in the oil sector?
Well, it's pretty serious, but it's not a permanent procedural block. It's very technical. It kind of falls under some rules of the UK Takeover Code, and Shell has basically denied what had been growing media reports of this takeover. So basically, there'd be this oil and gas behemoth, but this denial on the record legally bars Shell from making any bid for BP for the next 6 months, unless BP invites the offer itself or another bidder emerges or there's a material change. I think analysts are still really expecting the oil sector consolidation to pick up through other joint sectors, ventures, asset swaps or regional alliances. But it seems like this Shell-BP proposed merger is definitely off the cards for now.
Thank you so much, Juliana. We'll keep track of that, see what happens the next 6 months. If there's any change, we'll definitely keep our audience updated. Thank you so much, Juliana, for your perspective.
Thanks, Will.
So let's look at other parts of the Europe now. We see Germany's consumers' confidence is expected to dip slightly in July, with GfK's index falling to a minus 20.3 points from minus 20, and that's a negative 20, defying forecast of a modest rise. The drop was driven by households' growing tendency to save, despite improved income expectations, according to GfK and NIM survey. Analysts had expected sentiment to improve to a negative 19.3, but cautious spending continues to weigh on consumer outlook. Now we'll move to Asia. Japan's rice shortage is easing, with supermarket shelves restocked and prices falling right now. A 5-kilogram bag now averages 3,920 yen, its lowest in over 2 months, according to Agriculture Ministry data. This marks the first time prices have met Prime Minister Shigeru Ishiba's target since March, after he vowed to tackle soaring costs driven by poor harvest and tourist demand. Still, prices remain high compared to past years. Some shoppers recall paying just 1,800 yen to 2,000 yen for the same bag 2 years ago, before prices more than doubled by early 2025. Now we see in China is relaxing its urea export ban this month, allowing limited overseas shipment under quotas and minimum price conditions. Exports to India remain restricted, with a near-term quota set at around 2 million tons. The move aims to ease tight global supplies and surging prices of key fertilizer, which supports food production and supports food production worldwide. China, previously the top urea exporter, imposed a ban in 2023 to stabilize domestic prices and support farmers. Now we see analysts saying local prices are now under control, making the partial export resumption timely. Markets are expected to benefit from improved availability amid ongoing geopolitical and supply chain pressures. Still in Asia, the South Korean government kicked off its first euro-denominated bond sale in nearly 4 years on Thursday, in a test of investor appetite following the recent election of President Lee Jae-myung that ended months of political turmoil. The sovereign is marketing 3-year notes at around 40 basis points over mid-swaps, on a 7-year tranche at around 70 basis points above the benchmark, according to a person familiar with matter who asked not to be identified. Now we see in Philippines, the government has cut its economic growth target for the year as the conflict in the Middle East added to risk from the impact of the Trump administration's trade war. The economy is now targeted to expand 5.5 to 6.5% this year, from a previous goal of 6 to 8%, Finance Secretary Ralph Rector said in a mobile phone conversation on Thursday. And those are the highlights from the global space this morning. We're hoping that more will come out tomorrow, especially keeping track of what's happening at The Hague, and we'll see what governments of the world will be talking about in terms of defense spending.
Thank you so much for that, taking us around the world. Just before we go on the program, we'd like to say that the NGX is still doing good. If you're not part of the story of the NGX, perhaps you have missed some points. But maybe it's not too late. But the NGX is still on fire, still in that bull run. It's been there for like 2 weeks now. In that bull run, it's been there for like 2 weeks now, crossing different levels. I think we started 2 weeks ago at 114,000 level. Today, yesterday, close of trade yesterday, 21. That's a huge move. And then we saw data like a company like MTN has given a lot of investors more than ₦1 trillion in just this period. So that's why I say, if you haven't gotten on the bus, you might check if it's not too late. So yesterday, the market closed really, really good, gained 1.22%. Then the equities cap, that's the market cap, is up now to 1.18 trillion. Added 1.18 trillion, I beg your pardon, just yesterday, and is now up to 76.761 trillion naira. Major movers, Dangote Sugar, O&O, Champion, those were the top gainers, and of course the banks will not lose or miss out of the action. So the NGX is still doing good, to the joy of every investor, and that's where we draw the curtains on Business Morning today. Thank you so much for being a part of it, and Ladi will be back at 1 p.m. Business Incorporated. I'm still here in Abuja to give you more of what's happening at the Afreximbank. I'm John McQuarrie. Enjoy the rest of your day.